Hi everyone, welcome to What's New in Meta's Business Model based on the investor update Q3 23. So let's take a look at financials first. Very good updates overall with over 20% growth year on year, but we need to go back really year on 2 years, but still a very good CAGR then, constant annual growth rate if you linear extrapolate. So good update there, 23% year on year. Also, the other business metrics very good, just because last year was really a very bad year. But what really drew the investors' update and slammed the share price a little bit, at least in the first day, first day after, was the comment around the Middle East and how they, in the past, like the Ukraine war, had impacted overall advertising markets. What was funny about this comment is really that it was not part of the prepared remarks and came then up in the Q&A session, which, I'm sure the investor relations team was probably pulling their hair out that something like that happened, because every notable thing should be in the prepared remarks and the Q&A session should just be a regurgitation with some sort of detail around it. But in any case, this was one of those exceptions. Cost structure, as you can see, really getting under control, and this is because the denominator was just getting smaller, the revenue side, but also costs as a percentage of revenue. Really very good trend. Net income, very good. Also, as you can see, terrible year last year. Now, business model updates. So here in the business model canvas, everything that was highlighted in this investor update. We've just categorized it here, and really quite a bit of an update there. So the main thing, the main revenue driver, and this is just a continuation from last time. Let's start with this one. Continuation, as in the impressions have increased dramatically, 31%, but the average price per ad decreased by 6%, and that is because it was more CPI or CPM related revenue rather than cost per click. So what's the plan? They want to improve their targeting as well as measurements, and in both cases AI can help, especially with that targeting side of things, so that they drive better results, so return on investment or return on advertising spend. And with that one, they want to get advertisers to spend more money on the higher monetizing types of ads, such as cost per click, etc. Biggest drivers, what was called out was really the Chinese companies trying to reach customers in other markets. And that was called out quite a few times, also during the Q&A session. And other revenue, well, as we'll see a bit later, it's quite small, but the investors have a very strong interest in that, because for years they've been asking about how Meta will monetize WhatsApp. So there's been a few updates along the way on that one. We'll cover that in a few moments. So here, engagement and monetization are the key drivers of revenue performance. So let's look at engagement. Reels was a real focus for the last, 4 or so quarters. And they say that it genuinely drives incremental engagement. We'll see some numbers in a moment. And the other one is AI recommendation from unconnected accounts. Again, have a look at our Q2 update, where that was also covered. And I think that the figure there was 7% last time. And they're saying increasingly incremental. So the word incremental is really important. It's not just replacing other type of engagement. That's really the key word here. And I called it out also last time. AI is supposed to help with their recommendation system to drive engagement up further. Then other stuff, not just stuff, the future, generative AI experiences. So now they got their Meta AI introduced, which is the consumer AI, so to say. They don't have an other name as Meta AI, sorry. And the two areas where they are focusing on, so basically conversational, it gives you information, and they're using Microsoft's Bing as the interface, given that they don't have their own search engine and their search functions themselves. But the other one that they develop themselves are photorealistic images. So it's basically, well, if you're in the US, you may have already seen it, but basically the things you can do are, let's say in just a few voice commands, remove the background of a photo and replace it with something else. And that's, very interesting for some people. And honestly, if you use it, you'll probably find it interesting as well. Even, people like us or me who are not necessarily super social media users, not extreme users thereof, it's pretty engaging to do that kind of stuff from time to time. Their Meta AI has got all sorts of celeb personalities. Yeah, fantastic. And some other stuff. So we'll talk about this one later. Next one, Reels. So I'm not going to repeat what we've said in the last video on Q2, where we went through this at least a little bit. You can find the details in our premium resources in our store, where we're explaining how this kind of stuff works. But here, so 40% increase in time on spend on Instagram, driven by Reels. So that's a pretty significant uplift there. And they're saying it is neutral to company ad revenue. So what's happening there is basically Reels drives up usage metrics, but not commensurately revenue metrics. And therefore it was underperforming per usage, if you wish. Now, with this uplift, basically they're saying it is now neutral to overall revenue, but it is still, well, this is Susan Lee's wording, being sort of lower monetization per time. It is basically low monetizing lower per usage. So that is the relationship here. Check out our premium resources. And what was very interesting is they are saying that they are looking across all types of video engagement across their services, because more than half of time spent on Facebook is video driven. So here is really a big link to our coverage of Netflix, and I have called it out in our Netflix business model videos, so check those ones out as well. The competition is coming from many different ends for streaming. And now the other factor for revenue performance is the monetization of the engagement. And Reels has been a focus there for the last 4 or 5 quarters, because it was basically underperforming in terms of revenue, simply because people are not flicking through it, scrolling through it as quickly. And now it is neutral to overall revenue, but that is also based on incremental time spent on the platform because of Reels. So they're saying it can become a modest tailwind, i.e. an upside, and that's probably what they see in the long run that Reels can achieve. So basically they're saying it's not going to be a total game changer in terms of monetization. They want to improve ad performance through ranking improvements, as well as making ads increasingly interactive, and that could be quite interesting. So let's see what comes out of that one. If they find something interactive, cool, and they have started doing that then could be a game changer. But let's see. There's still future outlook. Then growing revenue and engagement on video. So very important announcement. Well, it's not surprising, but they are looking at all engagement across all forms of video on Facebook and Instagram. Then engagement on platform ads, and again they want to use AI to help business messaging. This refers to WhatsApp, and basically Mark Zuckerberg was saying, well, in lower labor cost countries, it can make sense to do messaging with human labor, but in the countries where labor cost is higher, that's not really a viable approach. But in the long run, they think that AI can help here a lot. And we're talking about AI-driven chatbots and messaging. And in that context, I personally refuse to use the word chatbot, even though you read it all the time, because the technology behind the conversational AI is just completely different from the other chatbots that we know for whatever 10 years or so. Very different. It has the potential to do a lot more than that. So keep an eye on that one. It's still very, very small revenue, as we'll see in a moment, but it could be a way forward for WhatsApp monetization. And using AI across the ad systems, take a look at our last video from Q2, where we spoke about Advantage Plus and a number of other things in that space. And again, so it's really a number of things to be considered. We had actually called all of this out before Reels even existed in our premium resources, so check it out. Evaluation metrics for new digital properties like stories and the user feed. It should be engagement metrics, network effects, daily active users, but also monetization and other factors. So you can learn all of that in our premium resources, and Reels is really the case in point where these things are quite different. So the overall assessment is more complex. Opportunity cost versus what it brings. And that said, Reels will exist and continue existing simply because TikTok otherwise will take over a big market segment. So that will be staying there. Moving on to the Reality Labs and the Metaverse. So if you look at the results, disappointing, went down further. But that said, this time around, the Quest 3 headset was announced for a while, and it only became available, I think, around the 10th of October. So basically, likely people have held off spending on Quest 2, etc., because they were just waiting for the Quest 3. So let's see what happens. They've done well with their timing ahead of the Q4, Christmas and Cyber Monday and Black Friday, etc. stuff. So let's see what we get in Q4 on that one. Other than that, this is the where the WhatsApp revenue is. As you can see, pretty small, but investors have been really interested in that for a long time. And here's a total bill for the Reality Labs, and I think it has exceeded $40 billion. So it's about time to get something back here. Let's see, over the next few years, literally. So this is the Quest 3. It's kind of a mid-priced headset. There's lots of money going into building an ecosystem and partnerships, etc. It is lower priced than the Quest Pro. I think this one sits at around $400 to $700, and the Pro is around $1,000. And the Apple Vision, I think, is expected to be upwards of $3,000. So, but that said, it will connect to a very different ecosystem. So it will also have the games, etc., but it will also have all the other offerings of Apple, like, Apple TV, the Apple apps, anything that you have on a MacBook, I would presume, etc., etc. So it's a very different ecosystem. On that one, I could even, some hardcore people do have really the headsets of different companies. As for the smart glasses, and I'm pointing that out because I do assume that smart glasses will be a bit different. So the smart glasses in collaboration with Ray-Ban, and they had that 2 years ago, but this is now really dramatically improved. It has the interface to the Meta AI via the microphone, and you can get the answers into your ear. You have a camera, etc. It's reasonably priced, and it's gotten very good reviews, like really good reviews. This has got also good reviews by consumers, but also quite a few negative downsides on the mixed experience side of things. The smart glasses have unanimously good reviews. And why I'm saying that is there's literally gonna be, everyone has got one nose and one set of eyes. So most people will only have one set of smart glasses if they have one. Whereas with these game sets, etc., you can have several of them. You can have an Xbox and a Nintendo Switch and this and whatever. And some people literally have 5 or 6 systems in parallel. Hardcore. But with smart glasses, more than likely you'll have one. So there's been this coverage around Meta has entered the AI wars, which didn't make sense because everyone is doing AI, and literally if you use that app, you use their AI, right? So it's not a competition as such. You're not gonna use Meta instead of a search engine because Meta's AI is better. That is very unlikely to be the case. However, as an entry point, the smart glasses, yeah, as mentioned, most people will have only one set of smart glasses, almost certainly, and whoever wins that entry point, they will get a lot more usage of their AI, and that's that I believe that it can be much more valuable as an interface or entry point to the AI world than smart watches. Literally, you can talk to your glass, as weird as it may sound, and it will give you responses and so on. Yeah, that's very interesting. So let's see how that pans out. Here are all this. I think I've covered most of it. So they were also, Mark was talking quite a bit about still the skills shift towards AI. They've been talking about that they got quite a hiring backlog compared to what they were planning for, so that they will see costs coming through in early calendar year 24. CapEx wise, there's quite a shift from CPU to GPU, so literally more AI computing capacity. And they've been kind of forewarning people, investors, that the CapEx bill will go up as a consequence of this. But yeah. Then I think whatever. For us, they changed the usable duration of the previous investments, extended it, so the cost profile will change a bit. In any case, that's fine. And yeah, I think everything else we covered. All of this and this. Yeah. AI and privacy, very important. So I found it, commentators thought it was a lot, but they said they spent 6,000 hours on testing privacy. So they have been clamping down requests that could lead to privacy or safety issues in relation to the Meta AI. So certain kind of contentious types of queries will just not be answered by the Meta AI, and that in some way goes into the wider discussions that we're hearing all the time currently in terms of Gen AI safety, etc. And they've spent 6,000 hours testing and whatever. So that's literally, what's that? 300, that's 20 people for 3 months. Literally, yeah, that's kind of okay, I guess. And yeah, that's pretty much it. These are the premium resources that I've been talking about. You will not find anything like this on the internet. Check it out in our store. You will learn the absolute fundamental, crucial business model concepts in digital technology, including the things that I've been talking about in relation to Reels. And this is literally the fastest way to understand the Facebook business model within 30 minutes, and unbelievably comparably and competitively priced. So check it out, and thanks very much. Remember, this is not investment advice. We will never give you investment advice. Check out our terms if you don't believe it and want to learn more about that. Thanks very much. Check out our store and like us if you like this.